world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Paul Taylor. Paul is the founder and CEO of Thought Machine, a cloud-native core banking platform. We first connected with Paul in November 2017, when he walked us through his background as a Google AI engineer and the origins of Thought Machine. Today, we zoom out and update, digging deeper into what drives banks' decisions to modernize core infrastructure and how, what approaches are best for what organizations, and who is furthest along in the journey. In addition to the insights we deliver through our podcast and newsletter, Rebank offers advisory services to fintechs, banks, and corporates. Drawing on our experience starting, running, and advising fintech businesses, and our vast network of the most impactful fintech entrepreneurs, investors, and innovators around the world, we help companies make sense of fintech, work through specific questions, and optimize proposition and strategy. For more information about our services, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Paul Taylor. Paul Taylor, welcome to Rebank.
Okay, welcome. Thank you.
Yeah, well, welcome back. It's good to connect again.
I think it was 18 months ago that we last spoke.
Yeah, well, you guys have done amazing stuff since then. I think you've raised a bunch of money and you've announced some interesting, or at least had reported some interesting new clients, Adam Bank and Lloyds here in the UK. Congratulations.
Thank you. Yes.
So, I'm sure get into all that, but to kick off, I thought it might be interesting to hear from you. If you think about the executive level conversations you've had with banks, genuine kind of first step in the potential sales process, how many of those do you think you've had?
Right. So I don't have an exact number, but a tremendous number. So I'm sure it's over 100 by now. A lot of people have come knocking on the door, and I will say it's generally been that way around. We don't have a aggressive sales force here. Generally, the banks come to us first. I think most forward-thinking chief executives or CIOs or other people want to see it directly. They probably feel they've been the victim of a difficult environment or previous letdowns, and they're very interested to see what it's like in the flesh. So I wouldn't have an exact number, but dozens of top tier 1 banks and many others of the tier 2 and tier 3s.
And as we mentioned before, a few deals have been inked, or at least are public knowledge. And presumably a lot of those 100+ conversations haven't yet led to deals. Why don't they progress, or at least progress as quickly as you would expect?
Engagements range from those who have got a clear idea of a project and know what they want to do and got budget allocated, through to ones who are just finding out, and so I think that's part of it. But we would still expect that many of those conversations would consolidate and turn into. And by the way, others have, right? We've got more than Lloyds and Atom. We're just those are the only two that we're public with. Mm-hmm. So we do have plenty of other projects, either signed or in the immediate pipeline. So it is growing. It does look very optimistic. Mm-hmm. From a kind of growth business point of view.
Yeah. Are most of those projects? How would you characterize most of those projects? Are they greenfield startup banks? Is it a new product offering that's kind of being developed and Thought Machine is going to support a specific product alongside the existing core? Is it a core transformation?
Yes. So I think overwhelmingly the biggest ask are the digital greenfield banks So what we're talking about there is an existing bank with a license and probably a household name has decided it wants to enter the market and do something new. So we all know that in the UK there's a healthy challenger bank industry. We all know that the customer numbers that those banks have been getting have been very, very impressive. That has certainly caused waves here in the UK, elsewhere, and a lot of banks say, well, you don't have to be a new company to launch a new bank, and why don't we have a go at this ourselves? I think banks have also realized that there's only so far you can go with digital apps, that it's fine for transactions, it's fine for simple payments, but when you want to open complex products or do change of address or many other things, it touches the core and slows it down. So I'd say overwhelmingly it is digital greenfield banks. But there are plenty of other projects too. There are people looking at replatforming the core. There are people, as you say, looking at expanding a product line. But I think for the bigger banks, even the digital greenfield play is seen as a stepping stone. It is, let us try something that is relatively simple. If that's successful, let us try adding more products into it. If that is successful, let us try migrating existing customers.
Well, this, I think, gets us kind of beyond simply the technology conversation, which is what is possible and what does Thought Machine enable, to the broader kind of strategic / cultural piece within banks around greenfield and what that actually means. So just yesterday, as you'll surely have seen, JP Morgan announced that they were shutting Fin, which was their app-only bank, which had been live for like a year, a little over a year or something. And that of course raised all sorts of questions. My immediate feeling, and more information may come out, is that while it was a helpful exploratory study, it wasn't deeply embedded enough in the strategic direction of the core proposition to actually form part of the forward-looking roadmap for what Chase was going to look like. And I get the sense that some of the other, perhaps most of the other greenfield propositions that we've seen pop up fall into that category. I'd be interested in your thoughts.
My only understanding that wasn't done on a new core, that it was an app on an existing core, but I'm not 100% sure about that. So if I'm wrong, I apologize. I really can't speak to the specifics of that case. I do think, though, you've got a point that I think if banks have been guilty of anything, perhaps it has been wanting to jump into the fintech world without really making it part of the broader strategy of the bank. We've just come back from Money 2020. There's definitely a feeling that banks are fascinated by fintech. They want to get into it, they want to do something, but beyond that, they're a little stuck as to what exactly it should be. No one wants to be seen to be left behind, clearly. Everybody's looking at how B2C fintech companies are doing and thinking, they're clearly gaining traction. What the next step can be somewhat difficult for banks. So what I mean by it's very easy to make a bit of noise or launch an app or do something, but how does that fit into the long-term strategy of the banks? Certainly, we are, at Thought Machine, we are a little bit at arm's length to what the bank's strategy is. They do tell us sometimes, it's obviously clearly their business, and there's a wide range of what we see. Some come with clearly, a 3 to 5 year plan of how to replatform the bank and so on and so forth. Other ones are just, it's obviously they've got less committed plans. One data point doesn't make a pattern or doesn't make an avalanche. I think that there's going to be plenty of other successful efforts there. Yeah, but of course, just like any project, it has to have the commitment from the bank, has to have the commitment from the senior management. All projects need that backing.
Yeah. So in the UK, if you look at Lloyd's, based on the available information, it seems like that's more of a replatforming with Thought Machine. I think the FT released some information about how Lloyd's planned to move 500,000 customers onto the Thought Machine platform, whereas RBS has launched a greenfield retail bank called Bo. I imagine your diplomatic answer to this question will be something like different strategies for different banks. Everyone has to pick what's right for them. But if you think about those two options, I mean, which do you vote for if you're the decision maker at the bank? Which makes more sense to you?
It depends what you want to do. If a tier one bank, the biggest problem the tier one banks have is the cost and complexity of their IT. Right? This is the fundamental problem that dominates all thinking when it comes to the technology of the bank. And it's not. This isn't just some sort of notional problem that can be managed away. The cost to the bank is severe. So, just talking in the abstract, but I mean, these figures are relatively reliable. Most of the UK banks, most of the big European banks, big US banks spend several billion a year on their IT. And of that several billion, the majority of it is kind of business as usual cost. So in other words, there isn't any real noticeable change to the customer from that, but all that money is spent, and a small amount gets spent on something that a customer might notice, such as a new app or so on and so forth. So where does the money go, and why is it so expensive? So let's take something that's very prominent today. So the Secure Customer Authentication Program. Last year it was GDPR, PSD2, open banking, and I can go on, and that's just a few relatively, seemingly innocuous regulator-approved projects. So if you look at SEA, what is the purpose? The purpose is that we go beyond username and password, and we have biometric logins and second-factor authentication. And I don't think there's anybody who doesn't think that's a good idea. But now, when you go to the banks, they have their authentication systems are not geared up for this. For example, what they do not have is what Thought Machine and others have built, which is a token-based authentication system. So in our system, the authentication protocol or the way of doing it is completely separate from the main system. So what happens is you authenticate in the authentication system, you get a secure token, and that follows all the transactions going back and forth. Where I'm going with this is that if we need to upgrade that authentication system, it's all in one single place. So it doesn't matter if it's fingerprints or voice identification or a code or whatever, relatively easy, relatively to change. You go into the bank, and those authentication systems are all over the place, and you probably have the frustrating system where you've phoned up one part of the bank, but you need another, and you got to go back, and if you're unlucky, you got to re-authenticate again. So that's where the IT budget of the bank is, and there's no bank, and just add up various programs like that, and it comes to a fortune. So there's no bank that isn't concerned about that, and there's no bank that wouldn't wish all that cost away if it could. And that's where we get to the kind of fundamental issue of re-platform versus digital banks. So, of course, it makes sense for a bank to launch a digital initiative. It's good publicity. It acquires customers. But I think it's a quite different argument. The size of what you would call unnecessary cost of the IT systems dominates a bank's thinking, and it wants to get away. And it shouldn't be seen as if this is the bank trying to squeeze every last penny out of its cost base. When a bank compares itself to a company that runs in the cloud and anything else, it can see that it can be done at the fraction of the cost. I mean, we're not dreaming that these costs can be cut. There are many, many organizations which run at a fraction of the IT spend. So when you look at that, the bank feels it's burdened with this unnecessary cost, wants to get rid of it, and they can't really do that until it's got a clean system underlying the bank.
For context, what's the geographic footprint of your pipeline?
Wow. The simple question is nearly everywhere. So there's no banks in Antarctica, but we have banks. We have opportunities in Africa. We have opportunities in Australia. We have opportunities in South America, North America. Asia Pacific's a very popular region. Japan, Hong Kong, everywhere. Now that said, the pattern does roughly follow the more developed countries in the world. So it is clustered around North America, Europe, and the more developed parts of Southeast Asia, Australia. But beyond that, there are very interesting patterns. I mean, one of the most interesting patterns is, of course, the unbanked. And can we skip generations and get many people in developing countries straight onto a digital bank account that costs £1 a year rather than £100 a year? and so on and so forth. But we are very international. We're not a very international company. we're all based here. Yeah. But I mean, banking is, at its core, banking is a universal problem or a universal technology. Everybody has deposits that they want to make. Everybody wants to earn interest in those deposits. Everybody wants to, not everybody, but every country wants to take out loans. And so banks are universally needed and throughout society. And so it is a global business. Yeah. Obviously, slight differences in language and currency, but they're pretty minor compared to the basics of how to run a bank.
Yeah. So UK specific example here, but what do you say when someone says to you they saw what happened at TSB when they attempted a core migration and they don't want to do that?
I think bank migration is always a tricky thing, but we can't let one failure put us off. And of course, in time, it got fixed. I think there's a public report coming out about that, and I think it may actually already be out. But that will be I think I would really want to look at the specific lessons of that to see what it was. There's a question of no, banks do migrations. I wouldn't say all the time, but banks do migrations frequently, and of course, you only hear about the one that go wrong. But the question is, why are they hard? Part of the reason they're hard is because the new platform that they're moving to isn't actually so new, and it isn't really built for that. Even though banks do this, they don't really build their platforms for change. They don't really build them for migration, so they're all somewhat built as a one-off. So going from one old school platform to another old school platform is quite a tricky thing because there's a lot of things you have to do. In Vault, our platform, there is, we've done various projects, ingesting data, getting customer data from legacy platforms, all those sorts of things, and done that. So, and also we would work with system integrator companies. IBM's a partner with ours. IBM's done a tremendous number of migrations. I work with the bank itself, work with the risk people in the bank, and you practice it again and again. You get it right. You go through all the things from all the previous projects you do, and hopefully it goes fine. So very unfortunate it went wrong, but it shouldn't be seen as a systemic or regular thing. Banks do migrations, and the better the platform you're moving to, the more smoothly it should run.
Why should banks look at a replatforming as opposed to building or otherwise rolling out middleware that they're plugging core components into and potentially swapping out over time?
Yeah, so the middleware, I think the middleware solution is the most common bank project that's going on now, and there are plenty of banks who are doing something like that, and I wouldn't stop them doing that. But that solves part of the problem and only part of the problem. There is a phrase which isn't a great one called hollowing out the core, whereby you replace things everywhere else. I think the fundamental issue is that it still only allows customers to do some happy path user journeys, logging on, doing various things. It doesn't really help you fix some of the core problems of the bank. It's still the thing I said about secure customer authentication or GDPR. Is it going to fix that? No. Is it going to allow you to launch products more rapidly? No. Is it going to give you real-time financial analysis in the bank? No. Is it going to fix all your security problems, for example, because you haven't got your data encrypted? No. So it'll fix some problems, and it'll certainly let app developers have a better time to quickly iterate on their apps, but that is, a percentage of the problem, and not even a particularly big percentage of the problem. And going back to what I said about the unwanted IT cost, that isn't going to save much. Better user experience for sure, but it isn't going to fix the problem about the IT budget.
What other banking infrastructure companies are you most intrigued by that you see?
That's an interesting question. There's, one that at the talk that we were at Money 2020, the CEO of Plaid was there right before us, and I thought he gave a great talk. And actually, that is what Thought Machine's first thing was going to be. We were going to be a platform that connected lots of banks through APIs to lots of app developers, just as I said. So we were going to be in middleware, so they're doing tremendously well. and they are, a great middleware solution. So I think that's pretty cool. Stripe are at the conference as well. I think they're doing tremendously well. So at Money 2020, an awful lot of people in the card acquirer space trying to get, it's still the fundamental problem of how to move money from one place to another place if you're not actually logged into a bank. And so a lot of people doing things like that. There's still some way to go, I think, before we've got a mature next generation core banking industry. But plenty of people doing other cool stuff around the edges. Just the sheer size of it's clear that a lot of fintech companies are getting to scale. And I think thought Plaid was pretty interesting in the sense that you'd be a brave bank that didn't want to be part of their solution. Mm-hmm. The numbers of engagements and banks they got is pretty impressive.
Yeah, there's something of a trend right now in the U.S. Around platform banking, for want of a better description, but less the kind of purpose-built platform that is creating the bank products, and more something of an aggregation layer, which is often connecting regional banks or community banks who are maybe struggling to grow their balance sheets in their local communities, put those on a platform and offer those products on a white label tech enabled basis. Have you taken a look at that model? And if so, do you have any thoughts?
Well, as I said, we kind of had a look at that back in the day, but not necessarily. I think that different markets have different issues that are really purely related to the market and not related to the tech. I think in the US, the banking industry, depends what word you want to use. You could say it's either very fragmented or very decentralized, in the sense that there's so many banks, gives users lots of choice, but also a little bit more difficult for those banks to give the depth of digital offering on their own, because they wouldn't it seems unnecessary. It seems unnecessary duplication of every bank. A very small bank has to build all these digital features, which are pretty much the same as somebody else. So it's possible that the kind of banking supermarket style model works or is more attractive to consumers there, more attractive to banks, just because of the sheer number of banks. But I think it's great. Volt has got the open banking capabilities, and if people want to write apps, third-party apps for it, great.
Actually, on that point, have you, in any of the conversations you've had, encountered banks or counterparties who are thinking more creatively than most about what they could do with a platform like Volt?
Oh yes, and indeed. So it's not all about cost. There's some banks who want to launch innovative products, and so in Thought Machine we have our experimental arm, which we call Thought Machine Labs, and the purpose of that was to produce proofs of concepts and produce next generation apps of things that could really show what can be done. So Money Monsters was a saving app for children that we could do, and for example, pocket money is difficult in the digital age. Where is the money? How much have I got? So we thought we'd have a toy that would help kids save, and that was a very interesting concept. We speak to a lot of banks and their innovation departments, and it is things like that. Banking just has too much friction. It's just too difficult, and for the simple things that we want to do are bizarrely we're easier to do in the cash world than difficult now. So pocket money in the cash world is great. When I was a kid, I had a jar. I never had a piggy bank, but I had a jar. Put the money in, counted it every week. It was great. Taught me to be a good saver. Habit I still got to this day. Saving Christmas, saving for a holiday. In the cash world, this is really good, and you can pat yourself on the back. We've got a project here called Savior, which is a piece of furniture which actually just you give it a spending target, and it shows you how complete you are, and it sits in your living room, and you can. It's meant to be a digital saving jar. So there's lots and lots of good concepts about how to use money better. It's not a particular focus of Thought Machine, but a lot of banks have got personal finance manager style applications, and Thought Machine provides the raw data for that. But you certainly see that people latch onto this. Where's all my money going? Help with upcoming bills, all that sort of thing. Our role in that is just to produce accurate real-time data. So one of the things that drives a lot of people is slightly nuts is they think their balance is what they've got, and then there's some card payment or bill payment that hasn't cleared yet. It clears, and they go, actually, I've got 50 or 100 pounds less than I thought I did. So, having real transparency, real-time data, when you spend something on a vault card or a vault payment, it just comes out of your account straight away. And there's the fundamental question of how much money do I have, you can give a more accurate answer.
What banks are doing the best job of thinking about the future?
Oh, wow. I wouldn't really want to pick out any names, to be honest. Well, put it this way: all the banks that we've signed are obviously committed to the future. They are forward thinking, and it's been a journey between all of us. Wouldn't want to just mention my own customers, but it'd be a brave bank that was doing nothing though. Sorry, I can't give you a more detailed answer on that.
Lloyd's made a strategic investment in Thought Machine recently. To what extent does that bind you to Lloyd's going forward? And to what extent do you continue to be completely independent and able to support banks across all countries?
So we had done some previous projects with Lloyd's, and they wanted to make a commitment. And so we made an investment commitment, and part of that was also a commercial commitment to do licenses. Lloyd's have proved to be a great investor. They've proved to be. They wanted to do it because they believe in the company, and they haven't. They've been very hands off and let us have our independence, and it's been great. We think we'll be a Lloyd's partner for many years. But I mean, there's awful lot of banks in the world, and it's great that they're kind of supporting us and funding us through this. But there's plenty of other customers out there as well.
One of the age-old challenges with software as a service, if we can describe Vault, is that how you describe Vault?
Just to a certain extent. So we don't actually run it as a software as a service solution. We run in the cloud, but the banks manage the cloud environment, and we deploy. So we give them a copy of the software to run. Mm-hmm. They run it in their Amazon or Google Cloud or IBM or Microsoft environments, and then and they're responsible for the running. But I'm not quite sure what your question is.
Maintenance is supported by you, or
yes. So let's talk through the various bits of it. The business model runs like a SaaS service. So it's a subscription license, and for that they get all the maintenance and they get all the upgrades and everything. So pay an annual fee, get everything. So it feels a bit like software as a service from that. We run a continuous deployment mechanism. So every 2 weeks we release all of the software, and the banks get that continuous deployment. And that is considered to be a very good pattern, because it means that banks get upgrades continually, and it means that when the upgrades are more gentle between one version and the next, and so we don't do big bang upgrades, and that's considered to be the best practice in the industry. The one thing that's different though is the banks run it themselves. So we package up the software, install it in their environments, and they run it. It's when you think about it, that is the best outcome. That's the balance between having the kind of modern software deployment, the bank being responsible for the money, and the regulator having confidence that the bank's running it, and not Thought Machine.
Sure. Okay.
And at some stage in the future, we may become a genuine SaaS company, but for now, we think that's the best model.
All right. Yeah. In terms of developing the software, obviously this is a massively complex system, years to build, all sorts of investment, and not surprisingly, I get the sense that, and in fact the Adam engagement and the Lloyd's engagement suggests that there was a bit of kind of co-development together with early clients, maybe led by Lloyd's. To what extent are you able to build a piece of software that meets the needs of all customers and can be quickly implemented and rolled out across various paying customers versus risking getting locked into a single client or number of clients?
Yes. So, so respond to your point about it being a very complicated bit of software. So, the learning experience can be complicated, and the first time you try it, it may be complicated. But we are determined that the output of the bank looks very clean and simple. So sometimes it takes a lot of goes to get something just right, and sometimes the architectural design of a component may seem obvious in hindsight, but it takes sometimes many months, sometimes a year to figure out what the elegant solution is. And for example, just to pick out one part of the system, so we've got what's known as the payments hub, and the payments hub does things like routing sort codes and account numbers and various things like that, and it connects to the payments gateways like faster payments, but it also does card processing, so it does credit cards and debit cards, and we've got a single system that does that, which is actually quite unusual in a bank. Banks typically have quite different parts to that. Another similar thing is we've got a single system for online web access through browsers and mobile, and again, most banks have got a different way. So there's a lot of architecture and design decisions done to get Vault into a kind of simple way. So to your question, we are a learning organization. I'm in my 50s, and I would say I've honestly never been learning quicker than I am today. I like to think there's still energy in me yet. All engagements with the banks teach you things about their points of pain, about what works for them, what doesn't work for them. So there's been a huge learning experience all the way through. The banks are helping us to understand banking better, and this comes from large conceptual things through down to just nitty-gritty of various bits of regulation and how things need to work. So of course there's learning there, but we like to think it's a two-way street. We're explaining to our customers how banks of the future could work. We are proving that things can work in the cloud. We're proving that things can be stable in the cloud. So it is a learning experience. It goes both ways. And to the last point of your question, the key piece of success is we write one piece of software and deploy it to every bank. Banks have, in addition to everything else that plagues them, they've got themselves into a lot of difficulty by building in-house systems that are one-offs. And it always looks good at the time, but then, of course, you're the only person who's built the system. You're the only person who knows how to work it. New developers coming into your team, they've never seen it before. They have to get up to speed. And that is actually a very costly model, because instead of, and what you ideally want is something whereby you share this piece of software with thousands of other institutions, and that knowledge of how to use it is spread throughout the industry, people coming on board to it, and of course the cost of development is much lower because you're sharing it with other companies. So a lot of banks, and certainly the main banks we're talking to, are aware of this problem and want to move away from bespoke, custom-built software and move into more software which is licensed and the development costs shared by other people. However, they want their own bank, right? It's not gonna. No one's going to be very happy if all the bank looks the same. So, how did we fix that? So we got an architecture where we call it the banking layer, and the banking layer is a set of modules written in high-level languages, such as Python or YAML, and in that is a way which a bank can do very detailed customization of the bank without really having to write the software, without having to interfere with the software itself. So, for example, the bits of the bank that it commonly wants to fix are the products in the bank. And we have a system of smart contracts, and they can edit the smart contracts and have whatever lending products, deposit products they want, and that gives them huge customization, but without adding to the system complexity. It's still one platform. Another place they want to do is be able to define workflows. So how does KYC operate? How do refunds operate? How does account opening operate? How does one change address? And we have a highly customized system where the bank can configure that whatever they want, either because of their requirements or because of the regulator requirements of the company, of the country they're in. So the goal there is always one piece of software, but highly customized, and hopefully that way, you can kind of have your cake and eat it. Mm-hmm. Shared system, easy to deploy, easy to maintain, fundamentally simple, but the banks get the business bit they want. ultimately, what a bank should really be focused on is the business side of the bank, creating the bank that develops the financial products for its customers. And another way that we sometimes thought about it is that we want to be one layer above the cloud layer. So Amazon provides all the infrastructure, and the bank, you don't have to worry about it. We're providing one banking layer above that, and it abstracts all the problems that you have to deal with in terms of handling software, and then the bank can provide the business logic on top of that.
How long would you expect a bank to require? Say they were going to set up a greenfield bank to get set up on the platform, to kind of tailor it to their own needs and start to work with it?
Not long at all. So most of the stuff works out of the box. They can build the products very, very quickly. Weeks they can build. We've got APIs for attaching digital apps to. So very, very quick. And if they've got the most of the pieces there's always complexity about integrating it into various things, sometimes integrating it into a payments network or something like that. But generally, they will have not much time at all. What would happen today, if a bank came today, we would sign an agreement, and they can have the next day they can have a running version of Vault, and that's a vanilla version, and then they can go through this banking layer customization. They can build the products they want, but that's weeks of work. Typically, so we find that we are now getting off the critical path to the bank going live. The critical path is regulatory approval, various things internally in the bank, and then building their own apps. Our end state is to have everything that they can just want to start a bank tomorrow. They can start a bank tomorrow. Now, they never will, because all the things I said about having a slow launch with live money, that all those steps need to be taken at an appropriate speed. But we want the system to work straight away. No complex multi-year, massively expensive builds or integrations.
Excellent. Well, you guys are providing a hugely valuable service to the entire industry. So thank you. Paul Taylor, thank you very much for joining us today.
And thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.